Hey folks, and welcome to the Pipnotic Symposium for the 7th of October 2021. Today we're going to talk a little bit about the Asset Strength Histogram. Just walk through once again what the individual lines and the colors mean and stuff like that. We do have quite a few questions regarding its use, so we're just going to touch a little bit upon some of its uses today, so that I hope that it gives a bit of clarity as to how to use this piece of software. So if we look at the software, you can see here it's operating below the price chart. Okay, I'm just going to change timeframes here so you can see a little bit of varying information. Remove the volume. Okay, and then we have, yeah, this is much better. So let me go like this. So we have this where we have the asset strength histogram running below the price chart. We have a few dots and stuff. So what this is doing is it's telling us a little bit about the underlying strength of the asset. And so typically if you have the mean line, like you can see here, which is a negative territory, typically this will indicate negative price movement. And if it is positive, like you can see maybe on, if we go to maybe the 30-minute chart, this will be indicative of positive price movement here. Okay, and you can see this pretty clearly. Let's see the mean. Yeah, the mean is positive now, so it turned from negative to positive just here. So if we mark that off just there, this is about where it moved from negative to positive. We go back to the 4-hour chart. It'd be actually quite interesting to see where that shift occurred. That's pretty late, isn't it? So the move already occurred, but then we do have confirmation in price that price is indeed looking to move higher. So this is probably where we had that small correction. Okay, the small correction kind of came earlier. You can see that it started to move positive here. Okay, so right around here we started to move positive, and it actually crossed to positive territory on the 1-hour chart, or the half-an-hour chart just around here. Okay, so what it's doing is it's showing us the underlying strength of the asset. It's showing us where we have extremely high and extremely low prices for the asset, so that we can begin to entertain the idea of buying or selling. And the beauty of it is it works very well when it lines up with supply and demand, so the supply and demand software. So if we go to a small time frame, like let's say the 15-minute chart, just so we have a little bit of volatility. Maybe that's not even a good asset to look at. Let's find something different like the EuroCAD. Okay, here. All right, so here we have a pretty good indication of what's going on. We have the supply and demand software operating here, drawing rectangles, telling us where we have historical value, and we have the histogram below the chart here. And here we have the signal lines. So let's just mark these off where they occur. If we look at these, when we had one that was here, another one that was here, bottom, another one that was here, another one is here. We're just about to get to where this area is starting to enter sell territory. Not quite. You can see there's still a bit of space before we get there, but maybe it'll, I don't know, move up to here or something before it starts to turn around, or alternatively a little bit higher, maybe here. But price is certainly beginning to move into a territory where we can expect price to turn around. And we do have this little area of supply just here that could be interesting to us in the future, should price return to it at a point when we have the histogram very deep in negative territory. Okay, that would be an interesting trade. There are several people who are using it like that, so they're waiting for the dots to form, and when they see these dots forming, they will simply take the trade if it's lining up with an area of supply or demand. And this is a really good strategy, because you know that price has had a really good run if we're low or if we're high, and so there's a pretty high likelihood that price will turn around, or at least have a bit of a manageable reaction at the relevant area of supply or demand. And I've actually been looking a lot into the histogram. That's actually why I've been quiet over the course of the past week. I've been yeah, really analyzing the information that the histogram is showing us and trying to glean additional information or replace the information that it's showing us, just so it's showing us something that's more important. Some of the things, one of my observations is, let's put the euro, American dollar on here. So when you have a really big run like this, where price really races down like that, that's a really big, strong move. Okay, so we're in pretty neutral territory for a while, and then price finally moved down like that. And so what I'm looking at doing now is, actually this is an even better idea, because we had a huge push in price, and here we had a very quick advance in the strength of the asset according to the histogram. So what I'm looking at now is identifying acceleration in the histogram, because if you have something like this, where if you're in a downtrend and price, the histogram is simply below the zero line and it stays down there for a lot of time, because we're in a downtrend, it doesn't really make sense buying at the dots, because we're in a downtrend, and so it's just a really bad idea, because price is just going to continue to move down. But what we do have that's interesting is, if price is negative and then it very quickly turns positive like this and pokes into selling territory like this one here, well, this could lead us to believe that we are looking to have some kind of a reaction or some kind of a bounce. Okay, so I'm trying to look for a way to massage this, or rather to quantify this behavior, and it's quite difficult. But I'm getting closer to conclusion, and I'm hoping to have something in the not so distant future. But this is just a beautiful push higher. You can see that we're in negative territory at, let's have a look where we were. Yeah, so at this area of demand just here, we were still negative, and then in 2 bars, okay, 8 bars, we managed to get up into this area of supply and touch this sell line just here. So that's telling us that's a very big price inefficiency. So we have a liquidity vol in the wake of this push higher, lending to the idea that price will move back to this historical area of value, which is here, before it continues higher. Okay, and so, I mean, when I'm looking at a price chart of anything, the first thing I'm looking for is liquidity voids. Okay, I'm looking for liquidity voids, and you can see that we have one here, we have one here, we have that one here, and then my next point of interest is, where are the sell zones for those? So the sell zone is here. So you could argue that this one has been balanced, because we came back to this area here, and then we have this one here. Let me just cover these. So we have this one here, this one here, we have a big one here, price came to this one here, price came to this one here, price came to this one here, and so we do have a little rebalancing to do up here and up here, and a little bit up here as well. Okay, and so when you have price imbalances above or below price, price will naturally gravitate back towards them to reach these price imbalances, just to rebalance price. And you'll see this happening all the time. And if you've seen any of the liquidity distribution videos that I did after discussing this topic extensively with Chris Laurie, we touch quite a lot on that, and we go into a considerable amount of detail explaining what this means and why, and so on and so forth. And so, essentially, the market is moving due to the rate at which liquidity can be distributed in the market. And so when you have a very illiquid market, price moves quickly and erratically. And when you have a very liquid market, then price typically moves a little bit more efficiently. And so when you have something like this going on, that normally means that, let me remove all of these lines. So just around here, this is like a low volume environment, and we had a huge increase in selling pressure and bearish volume. But because there's so much selling, the liquidity available on the other side of the market may not be sufficient to fill the orders as they're moving down. And when you, okay, what I mean, let me backtrack a little bit. So when you see price going like that, and we have another push and another push and another push, I mean, the lower price gets, the bigger the order book. So the orders are thicker at the bottom and thinner towards the top. And we normally do this as well when we go something like that, where you have price here, and then you have kind of thick liquidity, thin liquidity close to price, and thick liquidity. So this is very high, this is premium prices, and this is discount prices, and this is the spot price right here. Okay, so the spot price, I mean, price is just kind of doing that. It's pretty low volume. But when price races north, it's moving into thicker liquidity. But on its way there, it may consume all the liquidity available above the market. Okay, and so typically you also see something like this, where if this is a move higher, price will go like that, and the liquidity will get thinner towards the tops. And sometimes it'll actually gap higher because there is no liquidity. And so if there's a sell order, if there's liquidity available to be consumed by the buyers here, but that's the last one, that's the last offer, and the next one is here, I mean, price will have to gap up to grab it, to fill it. And so that's essentially what slippage is. Okay, and while we can see that clearly on a price chart, we can also use the histogram to show us when this is happening. Because when price is racing down like that, it's doing the same thing, just in reverse to my little drawing here. So if we go like that, oops, like this, and let's say that we're focusing on this one here. So price, we have thick liquidity, and then it gets thin like that. Okay, and if we look at this little price structure here, this is kind of a like low liquidity state, and then we have a lot of selling, a lot of selling down here, and the liquidity just thins up, and eventually there will be no liquidity. Okay, and when the liquidity dries up, I mean, price has to stop because it cannot keep going down, because there's no liquidity available to fill the orders to facilitate the move lower. And so price will typically have a break like this. And so my whole motivation to create the histogram is to help us visually be able to identify this. Okay, and so when price comes down like this, like you can see here, we move below this line here, we did it here, we did it here, it happened there, this happened there, this happened there. It's kind of telling us, excuse me, we did this here, getting close to it. It's telling us that we are reaching, rather, liquidity is drying up. And when liquidity dries up like that, typically on a price move like this, let's say for a price move down, you have a lot of selling. Okay, more selling, liquidity kind of dries up, and then because it's such an attractive price, and because it's so far away from the historical value here, so let's say that we were keen to sell here. You can see that we were keen to sell here because price was transacting nicely. We have efficient price movement. We have a relatively low volume environment where we have the buyers and sellers happily buying and selling from each other. And when it leaves like that, I mean, if people are happy to transact at this price, then people are equally looking to transact at this price. And so typically you'll see an influx of buying pressure here. So there'll be bullish liquidity below price here. Okay, and so that's the whole idea in using the histogram like this. So when price gushes down like that, we have a pretty good idea that this is disappearing, is drying up, and so we're going to move higher. Price races down like that, and we start to cup, and then we start to move away. And so that's the whole idea of using it. Okay, and so when you see something like this, okay, when you see something like this where price is negative and it stays negative, and then it starts to stop like that, okay, when it starts to do that, well, then this is something that we're being told. We're being told that on a bigger time frame, we're starting to look like something like this. On this time frame, we're still, let me use a different color. Okay, in this time frame, we're still kind of moving down like that. Okay, but we're getting closer. But on a bigger time frame, we're drying up. But this one is starting to do this. Okay, and then the subsequent pushes down like this one, and maybe the one that comes after this. That brings the level of liquidity lower. So it brings it closer to the zero line, as you can see here. And when that happens, boom, then we have the influx of the buyers. Then we have people coming in to support the price of the asset and drive price higher. That was confusing because this is not a price chart. This is like an order book. Okay, this is kind of like an order book. So when you see price move down like this, you know that price is approaching an illiquid market state. Okay, and when you have a push, relax, push, this push and this push, this is pushing liquidity down. We're going close to the zero line, and we can expect this is going to attract some people to buy because there are going to be some big orders nested here. Also, if you consider the order book for a second, let me change the color once again, where we have, this is the top of the book, this is the bottom of the book. The top of the book is low volume. This is on the opposing side of the market, and the closer you get to the bottom, we're going to see more interest in buying, and it just kind of gets less here. Okay, so here you have like people looking to buy here, maybe like 1, 2, 2, 3, 4, 4, 4.5, 5, 6, 8, 10, 11, 12, 15, 20. Okay, and so you can see that it thickens at the bottom here. So I live in the countryside, and we have packs of dogs everywhere where we are. So you can hear them fighting and going crazy in the jungle in the back. Yeah, it sounds like one of the dogs is suffering a little bit. It's brutal. One thing that Bali teaches you is that that Mother Nature can be quite cruel, because you see these dogs. I mean, you see some of these dogs. There's a dog on our road. Oh my goodness, this poor animal. It's just in really bad shape, and you think like, oh, I just want to take it home and take care of it. So you take the dog home, and you get back on the street and you keep going. You see another one, and you take that dog, you go and there's another one. So you could keep collecting poor dogs. I mean, you could collect 5 poor dogs a day in Bali for the rest of your life and never run out of dogs. And so we have one dog, and we've kind of left it at that. And yeah, it's harsh. It's very harsh. Philip will know exactly what I'm talking about. Anyway, but I hope my drawing is not too complicated. Essentially, when you see pushes like this, this is telling us that we have liquidity drying up. We're getting to the lower liquidity side of the market. Okay, as in these subsequent pushes lower are just thinning the books. Okay, so this is the buy side, and then you have the sell side, which looks kind of like that. Okay, and so there's a lot of selling here. Okay, and the selling decreases as price moves lower, and so this is essentially where the sell side and the buy side meet. Okay, and the same applies for the opposite direction, where you have the same thing happening, where you have the buy side, it thins out as price moves higher, and it meets the thicker side of the sell side. Okay, so this is essentially what we're looking for. But what I'm trying to say is the histogram is showing us this information, and while the histogram isn't perfect, it's bringing these things to our attention at a stage that enables us to react. And so if you're taking trades, if you look at the ASR, I mean, the ASR, it's a really cool robot, because it's buying at cheap prices and it's selling at expensive prices. But while the ASR works quite well if you manage it aggressively, if you don't manage it and you just let it go, it probably won't do very well. And so the beauty of the ASR, likewise the beauty of the ASH, is it's showing you when it's time to start to think about considering trading in the opposite direction. Okay, and so when we start to move up here, time to sell. When we start to move up here, dots above the variant line, time to sell. Have the same thing here and here, and now you can see we're starting to get negative here. Okay, but notice as well that we've been negative for quite some time, so maybe this is just going to continue to move lower here. And so we want to look for price patterns in the histogram and in price that will lend to the belief that price is going to turn around. And you can see that beginning to happen now, where we have divergence. And divergence is beautiful because it's showing us these really cool patterns where you can see we have a push in price, low, high, low. Okay, so this is kind of running the lows here. So we're potentially trying to release liquidity into the market that can be used to fill the orders of maybe some institutional participants in the market that will drive the price potentially high. And so now what we want to do is we want the same thing to happen on the other side of the market, where price will raise high and then it'll come down and it'll show us what it's actually really looking to do, and that is to move higher, to rebalance this and this and this. Okay, because these are liquidity voids in the wake of this move. These have to be addressed at some stage in the near future. Okay, and you can see that pretty clearly here. Also here we had another one where we had kind of price came down, it went up, it went down, and it went up again. Okay, low lows, advertising cheap prices for buyers. Sorry, and then we could see that the underlying strength of the asset was not supporting these cheap prices. We're starting to see the same thing happen here. So what can we expect? Well, we don't know, but what we can do is we can mark off the low here. You can go to the daily chart and see if we're at demand. And if we are at demand, which we're not, whether you can expect price to bounce. Where do we have demand? Well, we have historical value here. So price was happily exchanging hands here, and it went up. New value, we went down. We're exploring liquidity. We come back in. We have another go. Okay, so we kind of leave this range. We come back in. We pop. We have another one. We leave. We come down. We pop down. We come back up. So we move back into this range. Price wicks higher, and then we go. Okay, so we have value. The intention is showed to you in the form of this, for example, like this wick. Price goes down. Okay, so when you have an area of fair value and you see pushes below, or pushes above, if you have the push above, then price wants to go lower. If you have pushes below, like we did here and here, then price wants to go higher. Okay, here we have a push below, price went higher, a push above, price needs to go lower, then it left. And here we had kind of a similar thing going on, like so. Price broke away. We had some wicks above, giving us an idea that price might want to wriggle south. Then price starts to go like this. We're starting to do this. Price went down. Oops, wasn't a very good one. Went down and came back in. Okay, so that kind of would make one believe that price might be looking to go higher, but price did not have another period of exploration above. It simply kind of just came back down. So it will have to see what happens. But this is essentially what this software is to be used for. Okay, and so the mean is simply a mean of the histogram. Okay, so when you see the histogram, when you see the mean line in positive territory, as I mentioned earlier, well, this means that we probably have a positive average of the histogram, and you can see here it's starting to turn negative, which means that we are looking to continue to move lower. But also notice, because the market works in cycles, when these swap, notice as well, let me remove these lines so there's a little bit of clarity. Period separators finish. Okay, so when you see this, you can't always use it like this because it doesn't work, but when you see a positive, when you see a negative mean turn positive, where it turns positive is often where it looks to go down. And when you have it positive and it turns negative, it starts to move down, and we had something here, you have another one here, it kind of went down and started to go up. So from around here, this is where it looks to go down. And again, it's the whole cycle thing, where I wish I could normalize this data a little bit better so that I could have a smoother, almost like a sin wave representation of this data. I'll see if I can do something. But when you have something like that, where when you have the average going negative, and then going positive, and then going negative, almost at the peak of the negative is where you buy. Almost at the peak of the positive is where you sell, because this is when this is like the slow moving average, and when the slow moving average catches up with the data, this is typically where price turns around. That's why moving average systems fail horribly in most cases, because by the time the moving average is positive and moving higher, well, that's when the price looks to turn around and go negative. And so moving averages are really good because but you trade them opposite than what the trading books tell you. If you have a positive moving average, you don't buy. If you have a positive moving average, then you look to begin to sell. Okay, and the same applies for the moving average, or the mean line here. Good. Well, I've been rambling for 25 minutes. I don't know if this was even helpful at all, because I kind of rambled on a little bit. But have a look at it, and if you have any questions about the video or the histogram, just drop them in the Discord channel, and I'll be thrilled to have another look. Okay, thanks so much for watching.